This is...
Okay, ladies and gentlemen, new order please for euro. I'm placing an order to sell short at 117.645. Order placed to sell short at 117.645.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Live on Bloomberg TV and radio, this is Bloomberg Surveillance for our audience worldwide. Here's the price action this Wednesday morning. The bulls doing a little bit of a clean-up after the mess in the last 24 hours in this equity market. If you look back 3 days on the NASDAQ, a 3-day loss of almost 11%. Futures positive today. S&P 500 futures up 23. We advanced 0.7%. We briefly mentioned the euro. Breach of 120 in the last week. Verbal intervention brought it back down. And some dollar strength, broad-based, helping things out, dragging euro dollar down to 117.60. In the bond market, treasuries pretty stable. 10-year yield unchanged. 0.67% is your yield on the 10-year this morning, Tom.
Lisa, I just figured it out after Tuscany. Pharaoh went to London because pound cratered. Oh. He's living large in London.
Well,
that's
actually,
what it is.
You know what I hear? I hear that he spends more on gifts if the pound craters because he's paid in dollars. So all of his family members are living large.
The Pharaoh family are well aware that there are different tiers of Christmas presents, and cable at 120 gets you tier 1, cable at 130 or below gets you tier 2, and anything above 130 means a tier 3 present, which is a gift card of about $10. So south of 130 is good news for the Pharaoh household.
Very good. So much for Tiffany on Bond Street. Right now, the doctor is in. Dr. Sam Fazeli, with a doctorate in pharmacology, is truly expert on this pandemic and the hopes that we all have for a vaccine. He understands that the movement from phase 1, 2, 3 is fraught with risk, and the pro will speak to us now on this disappointment at AstraZeneca. Dr. Fazeli, good morning, and thank you so much for rejoining us this morning. What does AstraZeneca do this morning? What's the next step after you fail a phase 3 trial?
Morning, Tom, and thank you for a very, very kind words. But basically, what you've got to worry about is, and first, I wouldn't call it a fail. So obviously, we still have a trial that's put on hold. If the data shows that it's due to the vaccine, then it's up to the Data Safety Monitoring Board to decide whether it's a risk worth taking going forward. How you're going to convince people to sign up for taking doses then is a slightly different question. But it's also possible that it's something to do with either the vaccine itself in general, which would be bad news for other vaccine makers, or it could be to do with the way that the vaccine is delivered, i.e. that adenovirus. So we need the detail before we can make any judgments on that.
Sam, let's make some judgments, though, further down the line. Crystal ball, if you will. We know that 1, it's got to be effective. 2, it's got to be quickly and widely distributed. But 3, people are going to have to want to take this. Now, Sam, I just wonder if you can comment on the PR around this. There is so much pressure on these companies to push this through and push it through quickly. How widely received will this actually be once they do announce that we have one ready to go?
Yeah, so, John, with this noise or situation with the side effect, the sooner it's resolved, the better. The sooner it's dealt with, the better if it's actually truly not related to the vaccine, which is entirely possible. But I think there's already some damage that's already taking place. It's likely that people who don't know much about how these things go may feel a little less inclined to sign up for the vaccine trials, or even if they are in them, to turn up for their first dose or indeed their second dose. So we have said that we think that some of the other trials are likely to see some slowdown in recruitment or treatment speed. So certainly, as I said earlier, trying to get this data out before any specified date in November, I think, is going to be unlikely.
Sam, are we focused on the wrong thing? I mean, John and Tom were talking about reopening the economy, the idea that because we've gotten the numbers down far enough, it should be a time to reopen the economy. And yet the only way to do that safely is if you have rapid tests that you can take and that can be scaled up so we can have millions, billions of them so people can just spit, find out they're negative, and go. Why aren't we more focused on that?
You know, absolutely right, Lisa. So at the end of the day, the vaccine is an ideal outcome. It would be a fantastic thing to have, hopefully, that is safe and sound. And then, because we all want to not have to wear masks, not have to socially distance. I don't want to spit in a tube every day. But given where we are today, we already have what is essentially a vaccine. I mean, I'm kind of taking some poetic license there. A mask reduces your exposure to the virus, and that reduces the impact of the virus on your infection. So you've already got that, and it's very easy to do, and everybody can do it.
Sam Fazeli, thank you so much. Greatly appreciate it with an update here. I'm sure we'll have many more of these discussions in the coming weeks. Right now, Gina Martin-Adams on this market with futures up 20, up much more earlier, but still a nice lift, a nice move to stability after what we saw yesterday. Gina Martin-Adams, what will you write about this morning?
Well, this morning we wrote a lot about index valuations. We think that the correction that we've had over the last couple of weeks has really just been about deflating a mini tech bubble, not about a broad S&P 500 sell-off that was necessary because of valuations. And I think that this nuance is pretty important to assessing where the market goes from here, because frankly, the party stopped and the S&P 500 valuations stopped rising when the Fed balance sheet stopped rising in June. But nobody told the tech sector. And we're seeing a little bit of deflation in the valuations of tech. We probably need to continue to see that to close the gap with the rest of the market, which is going to create a pretty choppy market over the course of the next month or so. But frankly, the rest of the S&P 500 is not expensive. It's actually cheap by historical standards. We've got 90% of the index trading with an earnings yield above yield on mid-grade corporate credit. We've got more than half of the index trading at below average price-to-book multiples. So we started to dig into valuations and really assess the outlook.
Gina, you do a tremendous job of bringing the technicals into the conversation as well. Can you speak to that a little bit, just how supportive they are at the moment?
Yeah, well, there's nothing really special about where we bottomed last night. So I would say that the bulk of the evidence would suggest that this will be a little mini bounce within a corrective process for the S&P 500 over the short term. You typically see the index form a bottom when 14-day RSI or short-term momentum on the index reaches somewhere between 35 and 40. As of yesterday, we were still above 40, so we're not oversold by any stretch of the imagination. 2 weeks ago, we were extremely overbought. In particular, sectors like technology, communications, consumer discretionary were trading at overbought levels we hadn't seen in years. So we're certainly due for a correction in the big cap tech names and the mega caps in the S&P 500. We've gone through a significant amount of that correction, but it's tough to say that we're forming a bottom right here because we really haven't gotten oversold just yet.
Well, Gina, this is the problem for a lot of people that they confront this morning and over the next couple of days. Is this just a correction, something broad-based, or the beginnings of that rotation again? Gina, what would you pick this morning?
Yeah, our view has been that we're in the midst of a rotation. I think if you actually do the work and decompose the equity market into factors, you find that the long-short value factors started to outperform all the way back in August. Over the last week, we've seen material stocks actually up over the 5 days, industrial stocks falling less than half the market pace. This has been a rotation in a significant form toward more value sorts of sectors. We need to see that continue to take momentum. Last week, we published our sector scorecard early in the week, and for the first time since 2018, the tech sector fell out of the top 3 rankings for the S&P. So the tech sector did fall into sort of the middle of the road more value-oriented sectors like materials and industrial started to work their way higher on the scorecard, along with consumer discretionary and the healthcare sector. So I do think you'll have a mix of leadership or a shift in leadership that occurs not only has it occurred over the last month, but it'll continue to occur over the next several months, anticipating some degree of earnings recovery, some degree of economic recovery into 2021 with new leadership.
Well, Gina, putting the narrative aside, because it's been a very hard time to put a narrative to any of the market actions that we've been seeing, we start to look at the who behind the market actions. We've been talking a lot about SoftBank and some of the big options trading that they were doing. Who is left holding the bag at the top of some of this froth in the tech sector?
Lisa, are you looking at me?
I'm looking at you, yeah. I mean, I know you are unloading that all cash, that room full of cash.
Yeah.
Afterthoughts,
yeah, I think if you think about the S&P 500, you have seen something of a mini bubble, if you will, develop in the mega cap tech stocks. And it does appear that a lot of that mini bubble was created by the combination of institutional investors really chasing returns, sort of getting dragged into the market after the second quarter gains really surprised everyone. We did see institutional investor flows into some of the mega cap names in July and August, but also a continuation of the speculation among the retail investor universe. I mean, it's hard to ignore the fact that retail has been responsible for roughly 20% of equity market flows this year, and historically they average about 15%. So you are seeing some degree of speculation. You're certainly seeing, the highly levered triple Qs experience a tremendous amount of flows in either direction. So it is very clear that there is a speculative component of this, and that's somewhat retail driven. But that's not the only story. We did see institutional start to get pulled into some of these names as they chased performance to some degree. We're now seeing that froth removed from the market, and I would say the more we see that froth.
Okay, ladies and gentlemen, as you can see, the position opened, short position for euro at 117.645.
Years from now, we're still going to see multiples at relatively high levels. We're just going through a small adjustment process to normalize multiples that had gotten somewhat inflated relative to the broad market with respect to mega caps right now. We've got to go through that process. We will see multiples likely stabilize, and they'll stabilize higher than anybody believes is realistic, and that's because you still have a tremendous amount of liquidity provision at the Fed, and you just can't ignore that longer term.
Hey, Gina. Always enjoy catching up with you. Love catching up with you. Gina Martin-Adams there, Bloomberg Intelligence Chief Equity Strategist. Loving the idea, Lisa, that there is a room full of cash at Tom's house. I can reveal for our listeners and our audience worldwide, there's basically a guitar in every room, and in some rooms there's two, and I still haven't had an explanation as to why. Tom, why do you have so many guitars?
Oh, they get lonely. So,
they get lonely?
They get lonely, yeah. So
they're just on the floor, hanging out.
They're not on the floor, but they're just hanging out. Like, that's what you do.
He's hoping somebody will throw a couple of dollars into the room to fill it up with cash so he can triple leverage it up.
Tom.
That would be true. Yes, that would be true.
I've got a video of Tom singing Happy Birthday on a guitar.
Oh, really?
I might distribute one day. I've got a lot of leverage on you, to be honest with you.
Okay, it sounds like we need a musical.
That's blackmail right now.
I don't know.
Live on television.
He knows I've got a lot of material. Let's get to the price action this morning, shall we? That is our song. That is our anthem. I put that out on Twitter a little bit earlier. I don't know why it's our song. Why is Toto Africa our song? I will never know. Equity futures positive this morning from New York and London. I have no idea what's going on sometimes on this program, and maybe that's my fault more than his. Lisa, just sit out of it. This is Bloomberg.
With First Word News, I'm Ritika Gupta. Senate Majority Leader Mitch McConnell says the new Republican stimulus plan focuses on restoring supplemental jobless benefits and extending help for small business. The Senate votes on the measure tomorrow. It will cost as much as $700 billion. That's about a third of what House Democrats want to spend. Joe Biden opens a new front on economic issues today. The Democratic presidential candidate heads to the battleground state of Michigan. There, Biden will unveil a new policy aimed at fighting offshoring. That's the practice of U.S. companies basing some operations in low-tax countries. Polls show that voters are starting to trust Biden's approach to reversing job losses. And blackouts tied to wildfires are now spreading beyond California. Oregon's Portland General Electric turned off power for about 5,000 customers near Mount Hood. Dry winds were threatening to take down power lines and start fires. It's said to be the first time such a public safety shutoff has happened outside California. President Trump plans to announce further reductions to the number of U.S. troops in Iraq today. That's according to an administration official. About 5,200 American troops are still in Iraq. It's not clear how many will leave or when that would take place. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
I do double down on helping other Black founders, whether it's fundraising, hiring, growth, product, whatever it is that they need.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
Just a handful of really good companies, but the valuations are absurd. And what's happening is analysts are taking out their expectations out many, many years. So, okay, you got a great company, low debt on the balance sheet, but they're artificially inflated. They just need to be revalued lower.
It's not just about a story, it's about the price of the story. Chad Morganlander there of Washington Crossing Advisors. The price action this Wednesday morning shaping up as follows. Cross-asset worldwide, beginning with futures, stateside.
Stop on profit placed at 117.605. I'm placing stop on profit at 117.605. Okay.
No, John, Turkish lira from a 7.40 buttressed right up to 7.50 right now. It has been an ugly, ugly week for Mr. Erdogan battling that weak Turkish lira. Right now in oil, we've really ignored this, and it's been my fault. Amrita Sen joins us with Energy Aspects, terrific microeconomic analysis of what's going on in oil, but also the broader picture as well. How do you respond, Amrita, to the certitude of the pundits that this is just a bet on weaker global demand, a weaker global economy? Do you buy it?
Well, Tom, I'd say that we really never were talking about a strong global economy, right? I think, if anything, the price of oil is finally catching up with fundamentals. We talked about it not that long ago, the contango in the market. So the futures price was telling us that, prices in the future will be higher. And that was already showing the contango had widened. It was showing the physical market was oversupplied when OPEC had started to ease their cuts and U.S. production was coming back a little bit. But the price didn't move, and that was to do with the fact that, Feds kept the interest rates so low, so there's so much money around, and the dollar was extremely weak. Finally, those factors changed, and that's essentially what dragged prices lower. This was long overdue, and I think what this should help is accelerate some of those inventory drawdowns, which we're already seeing, but it should get bigger. And that's the only way we will rebalance this market.
Well, okay, I'm going to draw the ire of some of my co-hosts, perhaps, but trying to come up with a narrative to understand whether the moves in the equity market have been consistent with what we're seeing in oil. Oil seemed to be moving somewhat independently of the stock sell-off that we saw, the NASDAQ sell-off in particular, over the past 3 sessions, particularly having to do with OPEC cutting prices and people not increasing their orders all that much. Do you find the price
Position closed at 117.605. We have profit for £100.
The problematic thing with oil, of course, right now, the headwinds really, is that demand is recovering, like you say, I think, and you can see that in the equity market, but also whether it be home sales data, and just generally even, broader macro data in China, other parts of the world, recovering for sure. But it's transportation that's the weakness, right? And unless and until there's a vaccine, it is going to be hard to get people moving in the same way. Yes, traffic data is picking up, but, flying jet fuel demand remains at record lows still. And that is the issue over here. And that's why I think it is correct for oil to diverge from equities broadly. But once you have run down the inventories and once you do get the demand recovery, which, by the way, is a good year, if not 2 away, then things will probably correlate a lot better.
This is crucial, this idea that perhaps the economy can recover without people flying around and traveling around to the degree that they did in the past. How low could oil prices go, in your view?
I don't think that when we're talking about the recovery in demand, we're not saying that the recovery is going to take us back to pre-COVID levels, right? We should be very clear on that. We are recovering, but it's just that unless and until that last bit, which is going to be very oil-intensive, recovers, we're really not going to be able to go back to 2019 levels. I don't